Offline students, can you hear me? Online students, am I audible to all of you? Fine, friend. We'll start with the MCQ now. Yet to come. Friend, before I forget, I want all of you to install my app in your phones. I'll tell you why. I have been conducting 3 mock tests, proper pre-examination, and 3 MCQs. In my app, we have a feature where MCQ, the moment you finish the exam, they will give you marks itself. So you will at least come to know where you are standing as far as MCQ is concerned, mock test is concerned. The total, how many exams are going to be there? 6. 3 MCQs will take around 1.5, 2 hours, what I understand. Mock exams will be a proper around 2 hours, because I think for you it's 50-50 marks is there, right? So write these exams, okay, because the more you write exam, okay, you have that exam writing experience, the better for you. And this coming Friday, see, we have planned 3 mock exams mainly every Friday. Last Friday was the first one. Then Sunday I went live. I took a sample answer sheet from my app and I corrected the marks and I told them how you are getting marks in the examination. All right. That video will be available in my YouTube channel because one mock is over. Next mock is there coming Friday. Make sure you write that. How to access my app, etc. I will give you in writing now. Do it, and if you have any doubts, you can message me also. Third mock exam will be next Friday. 3 exams you write, and then you go to the examination hall. You will be able to face it very easily and you will be able to score very, very good marks in the exam. Because we all might be having the knowledge, but exam writing experience is something that many of us lack. So I request you to please attend those MCQs and the mock exam also. Okay, friends? Okay, now can you hear me? Please send me a hi if you can hear me now, online students. Yes, perfect. So online students, what I was telling you right now was I want all of you to install my app, okay, so that you can write 3 mock examinations and you can also do 3 MCQs. It's available in my app. All right, friends. This is my website. Yeah, that fellow is me. Ignore that. Do you see this thing called classroom on the top? Okay, just click on the classroom. Here they will ask either if you are going through laptop, right? So here you have a lot of courses. In fact, for FM, I have done a 3 hour theory marathon, okay, which might be useful for you. It's all priced at 100 rupees for all of you friends. That just 100 is also only for the purpose of making sure that if you pay some money, you will study. Otherwise, YouTube, etc. What happens is you will end up skipping the lectures. It's a psychological thing. Anyways, free. 99 you pay, you will study. That's for sure. So for that, I think there is a theory marathon here. Or you can go through your app. I'll just write down and show you. Kirtan, where is that page? I think it's here, right? Okay. I'll just just write down this because later on I might forget about this. If you want to install in your phone, you can be having an Android phone or you might be using an iPhone. Okay. If you are using Android phone, just search Tarun Jagdish in the app. Okay. After you search Tarun Jagdish, install the app and go to batches. There, they will ask you to request for a batch. There you go and give FM mentor. It's an FM mentoring batch where I'm conducting all the exams. Once you install this, inside this, there are two columns. One is test, other one is assignments. Okay. In the assignments, you are having mock exams. In the test, you have MCQ. So once you start a test, within a span of 2 hours of time, you will be writing a proper MCQ and marks also will be allotted to you. I can show you here also, but it's a little bit of a process and I'm not sure whether if it will come. I'll click on home. No, it doesn't come that way. You have to do it through the app itself. You have to go to batches and then only you will be getting it. These are all courses about us. Login. You have to log in to get the batches. That's why it's not coming. So I have to put a number here and log in. So once you log in, then you get all these accesses. If you're in iPhone, process is the same. Only thing is that instead of installing my app, you have to install an app called as Class Plus. Gone? What happened? Okay, it's here. You have to just install Class Plus. Once you install this, there is an ORG code that they will ask you. ORG code is ELEVM. Here, the batch code is FM Mentor. Okay, later on, if possible, I'll show you how the exams are coming over here. Can you just note down this in your book somewhere? All right. Let me try logging in, friends. So I'll be able to show you in live how the question papers are coming. There is very less network here. I'm not able to log in. Once I get a code, I will show you. Okay. Yeah, there is very less network. Not coming. So just note down this, friends. Okay. So here you will be allowed to write 3 exams and 3 MCQs. Please make sure that you attend these 3 exams. Everybody clear? Okay. Right. I'll now go to the next part. So now we will do MTP. Ready? So we already have the marathon note here. So I'll continue doing it here itself. Okay. Right. So friends, let's start with FMMTP. Question number 1. Question number 1 is a question on factoring. Now tell me, friends, what is the meaning of the word factor? Who is a factor? He is an agent who helps you to collect funds. Okay, maybe I'll give you a simple example. You all like to watch movies? Tell me who's your
Tell me the name of three people. Okay, one should be a very very innocent actor. Tell me a name of an innocent actor. Salman Khan. Okay. Now tell me a name of a cunning actor. Kamal Hassan. I'm not sure how is the fan following here for Kamal Hassan. Chennai, I'm very scared to take movie names. I'll take Kamal Hassan for time being as the cunning actor. I have nothing against Kamal Hassan here, okay? Yeah. Kamal Hassan. Now tell me a name of one villain. Villain. Listen to the whole thing, then ask. Yeah. Surya. Is it? Vijay Sethupathi. Okay. I hope the spelling is correct. It doesn't matter if it's wrong also. Now, friends, innocent Salman Khan has sold some goods to Kamal Hassan. What goods has Salman Khan sold to Kamal Hassan? Tell something here. Drugs. Is there any drug issue going on right now between Salman Khan? Yeah. Assume he has sold drugs for a value of 100 lakhs. Live? That's okay. I'm not taking drugs, no. It's only an example. It's okay. Let's focus back, my dear friends. What was I saying? Okay, Salman Khan has sold drugs for a value of 100 lakhs. How much money Kamal Hassan has to pay to Salman Khan? No, whenever Salman Khan is calling Kamal Hassan to pay the money, either number is not reachable or Kamal Hassan is busy somewhere or he will cut the call. Salman Khan is finally frustrated. He wants to get this money somehow. That is when Salman Khan will go to and he will tell to Vijay Sethupathi that Kamal Hassan is not paying me money, you please help me. So then Vijay Sethupathi will go to Kamal Hassan, he will use his criminal skills and somehow he will collect money from Kamal Hassan. So let us assume he will collect 100 lakhs. After collecting this money, Vijay Sethupathi will pay this money to whom? Salman Khan. Okay, so will he pay the entire money to Salman Khan? He will pay only, let us say, 95 lakhs. Why will he pay only 95 lakhs? The balance 5 lakhs is going to be his commission. So, friends, this appointment of gundas to collect money from the other people is legally called as factoring. Okay. In fact, to make this legal, there is an act called as Securitization Act. Is it there in your syllabus now? No, right? It will come at the final level. Don't worry. Okay. In that law, this is mainly for the banking sector. Have you heard about NPA? What's the full form of NPA? There are different types of NPA. Standard, sorry, substandard, doubtful, loss. Loss is almost gone category. Whenever something reaches doubtful or loss category, bankers also have gundas with them who go and collect money. Friends, they will be people working in the gym, 7 feet tall, big bodybuilder bouncers, they will be. These fellows will just go knock on the door and stand there. Enough, they will get all the money back. Understood? These people do this legally because they come under what act? Securitization Act. They can call, harass those people, no problem at all. If we do it, we will go to jail. They can do it, but this is what you call it as factoring. Now tell me, factoring is good or bad? Ethical point we'll discuss later. Okay. First thing, Kamal Hassan should himself pay the money. He's not paying the money. Okay. Second thing, whether Vijay Sethupathi should go, not go, it's all ethical questions. We are not doing ethical class here right now. My point is, what are the advantages of appointing a factor? Our headache will come down. Or can I say that Salman Khan does not need to make any calls or his cost of administration will come down? Am I right? Second thing, he was having bad debt. Now he will not be suffering anymore bad debt. There are two types of factor with the recourse, without recourse. With the recourse means if Kamal Hassan still does not pay money, Kamal Hassan commits suicide. Assume, okay, he doesn't pay money. Who will suffer the loss in that case? Salman Khan will suffer the loss. He doesn't commit suicide, friends. Please relax. Chennai is very scared to talk about movies also. Yeah? All right. What do you mean by without recourse? What did I say? I spoke about with recourse. What do you mean by without recourse? With recourse means if the money is not paid by Kamal Hassan, who will suffer the loss? Salman. Without recourse means if Kamal Hassan doesn't pay the money, Vijay Sethupathi will face the loss. So where is it more risky for Vijay Sethupathi? Without recourse or with recourse? So for without recourse, will he charge more commission or less commission? More commission. So the bad debt savings will come only in case of what, friends? Without recourse. It will not come in case of with recourse. These are the advantages or benefits of having a factor. Now tell me, what are the cost of having a factor, friends? You have to pay a factoring commission. That is point number one. Okay. What is the other advantage of appointing a factor? Oh, so what are the other costs of appointing a cost? Okay. There is a terminology called as opportunity cost, or it is the interest which sometimes Salman Khan will have to pay to Vijay Sethupathi. That is the tricky area. I will give you one more diagram to understand that. Okay. So I'll just go to the next page now. Now, interact with me. Here you have Salman Khan. Here you have Kamal Hassan, and here you have Vijay Sethupathi. All right. Salman Khan has sold goods for a value of how many lakhs? Kamal Hassan is supposed to make the payment to Vijay Sethupathi, but this might be happening after, let us assume, 3 months. Today itself, Vijay Sethupathi can give an advance to Salman Khan. Salman Khan will say, see, I don't want to wait. You collect from Kamal Hassan, you give me some money today. So when Vijay Sethupathi is paying advance to Salman Khan, there are some rules involved. For example, he will say, I will maintain 10% reserve. My commission is turning out to be 5 lakhs. Okay. And the interest that he is going to charge is going to be, let us say, 18% per annum. Please repeat with me once again. How much is the reserve he has told? 10%. How much is the commission of Vijay Sethupathi? And what is the interest per annum? 18%. Okay. For time being, I'll keep it at 1 year. Okay. Now, tell me my one question. How much advance will Vijay Sethupathi give to Salman Khan? How do you calculate? Let your answers go wrong. Give me some numbers just for me to understand. Okay, or tell me the calculation. How will it come? What is the total amount receivable? 100 lakhs. Am I right? From this 100 lakhs, now tell me how much is the reserve they have told? So that will be minus 10 lakhs. We can reduce the reserve. Next thing, how much is the factoring commission? That also he will take. What is the balance that you are getting over here? 85 lakhs. On this 85 lakhs, how much interest are they charging? 18%. So what is 85 lakh into 18%? 15.3 lakhs. So once this is paid, only the balance money will be paid to him after even taking the interest. That will be how much? 69.7. Okay, so he will pay only an advance of 69.7 lakhs. Now, friends, some of you might get a doubt. The doubt will be as follows. Why can't I do 100 minus 5 factoring commission? What is the balance coming over here? On that 95, can't I do 10% reserve? Is that right or wrong? Why is it wrong? First, we have to allocate the reserve. Who told that? We do it like that. Is it? Is there any law which says you should do it like that? Securitization, does it say that when you're giving an advance, you should first take reserve, only then factoring commission? No. Friends, even this is correct. Nothing wrong if we take it like that. In reality, practically, I will tell you what is the scenario. Practically, there will be an agreement between the people which is called as a factoring agreement. Everyone repeat the word? Factoring agreement. In this factoring agreement, they will give the terms and conditions. So in that, they will tell normally, okay, this is the amount. In order to give you advance, I will reduce reserve, then I will reduce factoring commission, then I will take the balance, then I will do into 18%. And then I will reduce even that 18 and pay you the balance money. Sometimes the agreement will not tell like that. In that case, you can in fact do it in different way. 100 minus 5, you get 95. Minus 9.5 will give you how much? 84.5. You can pay this as advance. Take interest after 1 year. That is also correct. So all that depends upon what? Factoring agreement. Unfortunately, they don't tell you this in your classes or in exams. So now what happens is, in your books, nowhere it is given. Exam hall, suddenly you get confused. Should I take reserve first or later? So from exam point of view, you follow this particular approach. Are you all clear? And you have to give an assumption that this is how it is supposed to be done. That's all. Are you clear with the concept of factoring, friends? Okay, can we start doing a problem now on this one? Okay. Yes. I'm not giving you that in writing. I think that's not required. Okay, just explain the concept. I did that. Yes. Now let us do this question. Question number 1. Everyone write down. Working note 1. Basic data. Working note number 1. Basic data. Basic data. All right. Now tell me. NV Limited is a manufacturing industry which manages its accounts receivable internally. It supplies articles, blah, blah, blah. Total sales ledger of the company stands at how many lakhs? 200 lakhs. Write down in your books point number A, total sales. Online students, I hope it's audible to all of you. Yes, point number A, total sales. How much is the total sales? 200 lakhs. Now, point number B, what are they saying over here? How much percentage is credit sales? Write down point number B, 80% is credit sales. Point number B, 80% is credit sales. Credit sales. Fine. So now tell me, next part. Now they have told company has a credit policy of 2 bar 40, net 120. What do you mean by that? If you pay within 40 days, you will get a 2% cash discount. Normal credit period is how much? 120 days. So write down credit policy hyphen 2 bar 40, net 120. Two bar 40, net 120. Now, past experience has told that out of the total, 50% avail discount and balance are collected within 120 days. So that means 50% people pay within 40 days. Balance 50% pay within 120 days. So write down next point. 50% pay within 40 days. 50% pay within 40 days. And balance 50% and balance 50% pay within 120 days. Balance 50% pay within 120 days. Are you all clear with this part now? Okay, next one. The finance controller estimated that bad debts are around how much percent of credit sales? Write down. Bad debts is equal to 1% of credit sales. One percent of credit sales. Clear, friends? Okay, next part. With escalating costs associated with in-house management of the debt task coupled with the need to unburden the management with the task who has to focus on sales promotion, CFO examining possibility outsourcing, blah, 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 blah. Don't read any of that, not relevant. Currently, the firm spends about how much percent to administer its credit sales? 2,40,000. Write down the next one, administration cost. Exam hall, they will give so much emotions, you know. This is nothing in costing. CA final, one standard costing question was there. They taught you how to make jam. You know this mixed fruit jam. One full page on how they make jam, marmalade, this mix, etc. Students are reading. Nothing is there. Next page, only basic data starts. Okay, now write down. Did you get this 2,40,000 per annum? Okay. To administer its credit sales. These are avoidable as factoring firm is prepared to buy the firm receivables. The main elements of the proposals are it will charge how much percent commission? So write down the next point, total commission. Commission, how much is the commission? 2%. It will pay advance against receivable to the firm at an interest rate of how much percentage? 18%. So write down the next point. Advance will be paid at 18%. At 18% after withholding what? 10% reserves. After withholding 10% reserves. Next one. Company has an option to take a long-term loan at the rate of how much percent? Or may take bank finance for working capital at how much percentage? 14%. There are two things they have given. Either long-term loan, so write down, okay? Long-term loan interest, 15%. Long-term loan, 15%. Next point. Working capital loan. Working capital loan is how much? 14%. 14%. Are you all done writing this? So friends, we are done with the basic data. Okay. Now, I'll give you 1 minute time. Read through the basic data. Think what are the hidden information. Come on. Ready? Shall we discuss together now, one by one? First one. Friends, 200 lakh sales is given. 80% is credit sales. From that, what can you find out? Can I find out the credit sales? So write down working note number 2, analysis. Working note number 2, analysis. In that you write down Roman number 1 will be what? Credit sales. How much is the credit sales? 80% of 200 lakhs. So do you get the answer as 160 lakhs as the answer for the first one? Okay, next part. Then they have told past experience shows 50% avail discount and 50% pay within 120 days. From that, what can you find out now? Can I find out my average collection period? Average collection period, that will be 120 days into 0.5 plus what? 40 days into 0.5. So when you do like this, what is the answer you get over here? 60 and 20. Do you get the answer as 80 days? Now tell me, if your average collection is 80 days, from this, can I go and find out my average sundry debtors? How do you find out your average sundry debtors? What is your total credit sales? 160 lakhs. This is for 1 year. My receivable is blocked for how many days? 80 days. So this into 80 divided by 360. I think 1 year should be equal to 360. They have told in the question. Just read. Yes, 1 year is 360 days. 160 into 80 by 360. So what's the answer you get over there? 30? 35 lakh. Tell me in full without rounding off. 35 lakh 55,556 rupees. Okay. Okay. All right, friends. So once you are done with this, can I go to the next part now? Are you still writing? How many of you are still writing? Just raise your hands up. Okay. I think all are done. Next part, friends. So once you are done with this, the finance controller has estimated that the bad debt losses are around how much percent of the credit sales? From this, can I find out the bad debts? How much will be your bad debts? Do you get the answer as 1,60,000 rupees? ₹1,60,000. We can find out one more thing over here, friends. Can I find out what is going to be my cash discount? That is 50% people are going for 40 days. Am I right? So when I look at it that way, 160 lakh is the total. Of that, 50% people are paying within 40 days. To them, we are offering how much percent cash discount? Into 2%. So 80 into 2% will be how much? 1,60,000. This is your cash discount. Okay. I believe all of you are done writing this. Can I go to the next part now? Okay. Friends, now let me read the remaining part of the question. 80% credit sales, credit policy, 50% done. Now they are saying that the firm will have to spend 2,40,000 on administration cost also. Okay. These are avoidable as a factoring firm is prepared to buy the firm receivable. Factor is charging a commission of how much, friends? 2%. From that, can I find out the factoring commission? Factoring commission will be 160 lakhs into 2%. Do you get the answer as 3,20,000? Three lakh 20,000. Okay. Next part. Can I go to the next part now? Right. Down then they have told it will pay at to the firm an interest at the rate of 18% after withholding how much percent reserve? Okay. Shall we do that now together? tell me what is the order that we are going to follow. I just told you the order now. I'll write down advance. First, I will take what point number A will be what? Whatever is my receivables, because that is what they're going to give me as advance, correct? How much is my receivables? Everyone tell me. 160 lakh is not my receivable, that is my credit sales. 35 lakh, 55,000, this is my debtor. This is what I will get as advance. I will not get my credit sales as advance. Everybody clear? Now, if this is your receivable, from this first I will reduce what, friends? 10% reserves. How much is 10% of 35 lakh, 55, 556? 555. Okay. After this, what will I reduce? I will reduce my factoring commission. Everyone tell me how much is my factoring commission? Wrong. It is not 3,20,000. Why? 2,56,000. Wrong. 71,000. How did you get that number? Excellent, friends. Give her a good clap, everyone. Friends, this commission is for 1 year, but I will receive debtors every 80 days. So I will only reduce the commission for 80 days because next advance will come after 80 days. That time again I have to reduce the factoring commission. So here the formula would be, you can put this with a reading pen because students make mistake here. 3,20,000 into 80 divided by 360. So I think you'll get the number as how much, friends? 71,111. Okay. Once you reduce this, can you tell me what is the balance that you will get over here? Is it 31,28,889? On this, I will be charging interest at the rate of how much percentage? Do it and tell me how much interest will come. 563, 200. Your answer is wrong. Into 80 divided by 360, my dear friends, because this interest you're taking only for 80 days, not for 1 year. 31,28,889 on that 18% into 80 divided by 360. 1,25,000. Once I reduce this, I will know the balance advance. How much is that turning out to be? 30 lakh 3,733. All right. So are you all clear with this part now? This is a very good question, friends. This one question, we do it correctly. It covers all the areas. Now, friends, we got the advance. Everyone interact with me. What are the advantages of appointing a factor? Can you tell me? I'll just write down the next one. I'll call it as Roman number A. Cost benefit analysis. Okay. Now tell me, what is the first merit of appointing a factor? Can you tell me, friends? You are saving administration cost. How much is the administration cost saved over here? Can you tell me? 2,40,000. Second thing, we are going to save what? Bad debts. But this will come only in case of what, friends? Only in case of without recourse. So we are assuming it is a without recourse arrangement. How much is the bad debt that we found out earlier? 1,60,000. So these are the two advantages. So when I add up these two things, do I get the amount as 4 lakhs? Okay. Now tell me what are going to be my cost. I have to pay factoring commission. Everyone tell me how much factoring commission I have to pay now. Do I have to pay 71,000 or 3,20,000? Now you will take 3,20,000. Not only this, you have to pay interest also. Am I right? How much interest you have to pay over here? 5,63,200. Correct? So can you tell me what is the total cost that you are getting over here? Is it 8,83,200? So from this, can I say that I am having a net loss or net cost of appointing factor? Can you tell me how much is my net cost of appointing factor? Is it 4,83,200? 4,83,200. So friends, this cost I am paying because I receive an advance in my hand today. Am I right? How much is the advance I received today in my hands? 30 lakh 3,733. So indirectly, can I say I pay 4,83,000 because I received how much money today? 30 lakhs. From this, we can find out the effective cost of factor, or the formula for this will turn out to be A divided by B. A divided by B. Do you get the answer as 16.08%? Or the logic I will give you in writing below this. The logic goes like this. I received 30 lakhs today. Due to this, I paid 4.83 lakhs. This is similar to interest, which is 16%. Now tell me, friends, this fellow from bank, he can get a term loan at 15%, working capital loan at 14%. So which is better? Bank loan is better or factoring is better? Bank loan is better. I think I'm going a bit fast. You write down, then I'll repeat the whole thing. Relax and write down. All right. Are you all done writing this in your books now? Are you still writing? Right. Should I zoom it? 1 minute. I hope you have written before this part. Sure. Huh? Okay. Anybody still writing? Please raise your hands if you're still writing. Let them finish. Scroll down, is it? This is the last part, yeah. All right. Fine, friends. I believe all of you are done writing this. Okay. Now, friends, let's read the requirements one by one. What is the first question over here? Everyone tell me. What is the average level of receivable? Come on, tell me what's the answer. So what is the answer? Answer should be B. Fantastic. What about question number 2? How much advance the factor will pay against the receivable? Fantastic. You got the answer for the second one also. We still have 2 more. Let's wait. Third question. What is the annual cost of factoring? Come on, tell me. 4 lakh? Hold on. Relax. Okay, wait. This is a tricky problem. We are doing question number 3. Am I right? The answer given in your books is 8,83,000. Let's just cross check. What is the annual cost of factoring to the company? It's not percentage, it's cost. So when you correct. These two are the costs. So what you're saying is right. It will turn out to be how much over here? 83,200. Next one, what is the net cost to the company on taking on the factoring service? 4,83,200. And what about the last one? What is the effective cost of factoring? Come on, tell me. So, friends, when you put basic data analysis correctly, MCQ answers will come by default because if you understand the question, answers will come automatically. So, MCQ is easy, but it is the same thing that you did before. Earlier, you were just solving the whole answer. Now, from that answer, you're picking and putting what? MCQ answers. As simple as that. Okay, can we go to the second question now? Perfect. Ramu Limited. Let's do it together. So, question number 2. Working note number 1, basic data. Wait, there's a doubt online. Can we take factoring commission as receivables into percentage? Okay, with whom? TT, yes. You can do receivables into percentage, then you get factoring per 80 days. So whatever answer you get like that, you have to multiply into 360 by 80. You will get the same answer. You can do it like that. Okay. All right, friends. Please keep quiet. Now, Ramu Limited. Quite. Ramu Limited wants to implement a project for which 25 lakhs is required. So write down point number A, fund required. Point number A, fund required. How much is the fund required? 25 lakhs. For which they have the following options available in front of them. What is the first option? Everyone tell me. So write down point number B. Option 1, 100% equity. Option 1, 100% equity. Next point, you write down option 2. Now tell me option 2, is it 100% equity? No. It is having a mix of equity, preference and debenture. So write down option 2 hyphen mix of equity, preference and debenture. Preference and debenture. Are you all clear with this part now? Okay. Next one. Fine. So once you have written this, now they're asking you what is the indifference point and EPS at that level of EBIT, assuming the tax rate is 35%. Indifference point. What do you mean by the word indifference point, friends? Point where 100% equity's final answer is going to be equal to the answer that you get under. So option 1 should be equal to option number 2. So they're asking what is the indifference point and EPS at that level of EBIT. Have they given the EBIT in the question? No. So let me take a fresh page. Listen carefully, then you write down yourself. Okay, ready? So we are having two options. One is option number 1. Other one is option number 2. Option number 1, let us assume the EBIT is equal to X. Option 2 is also X. Option 1, will you have any preference, dividend or interest or anything? But in option 2, interest will be there. How much will be the interest? Can you tell me? 10,000 into 100. How much is 10,000 into 100? 10 lakhs. On 10 lakhs, how much is the 10% interest means? 1 lakh. So here you have an interest of how much coming in? 1 lakh. So here, from this we can find out EBT. EBT will be X over here. Here it will be X minus 1 lakh. On this, what will come now? Tax. How much is the tax they have told? 35%. So it will be 0.35X over here. Here it will be 0.35X minus 35,000. So now tell me, once you do this, what will be your earnings after tax? 0.65x, and here it is turning out to be how much? 0.65x minus 65,000. Am I right? Okay. Once you get this, then what will you reduce from this? Preference dividend. So how much is your preference dividend? Can you tell me? I think they have told in the question as how much? 5,000 into 100 is 5 lakhs. On 5 lakhs, 12% will be how much? 60,000.
Option 1.
Oh, option 1, it will not come. Thank you for letting me know that. Okay. So here it will be 0. Here it will be 0. Okay. Now, so once I reduce this, I will get my earnings to equity holders. So that will be 0.65x over here. Here it will be 0.65x minus 1 lakh 25,000. This, if I divide it by number of shares, I should be getting my EPS. Am I right? So how much is the number of shares I have in the first case? 25,000. Second case, what is the number of shares I have? Only 10,000. So here you will get 0.65x divided by 25,000. Here you will get the answer as 65x minus 1,25,000 whole divided by 10,000. These two answers should be the same is what they are trying to ask you. First, can you write down till here in your books? Then we'll create an equation. All right, friends. So from this, can we create an equation now? What will be the equation that you will have? 0.65x divided by 25,000 is equal to 0.65x minus 1,25,000 divided by 10,000. On cross multiplication, you will get what? 6,500x is equal to how much is 25,000 into 0.65x? How much? 16,250x minus what? Oh, that will be a very big number. 3, 2, 250 lakhs. 1, 2, 3, 4, 5, 6 zeros. Fantastic. So now I think when you do this, you will get 9,050x is equal to 3125, 1, 2, 3, 4, 5, 6. So what is the value of x that you get over here? 513. That will be your EBIT. Did everyone do it?
Yes, thanks. Are you all done writing this? Now. Okay, so let's go and check the question now. Here the first question, there's only one question over here. What is the indifference point and EPS at that level of EBIT is what they are asking. So friends, what is the number that you got over here? 3,20,513. So tell me which one is going to be your answer over here? Oh, it can be B or it can be D. For that, we need to go and find out the EPS. Beautiful. So friends, finding the EPS is very easy. Can't we just put 0.65x divided by 25,000? Okay, so you can just 1 minute. So it will be 0.65 into 3,25,13 divided by 25,000. Do you get the answer as 8.33? So here your answer is going to be this one. It will be B. Done. Okay. Class in the end will do. Let's focus on the questions now. Can we go to the next one now? Okay. Yes, friends. Now we'll go to question number 3. Come on, this you can answer yourself, okay? I am giving you 1 minute time. You tell me the answer yourself. Let everyone think and give me the answer. All right. Tell me how many of you say the answer is A, raise your hands up. B, raise your hands up. C, raise your hands up. D, raise your hands up. Your answer is right. It is 1.15. How do you do that? Give yourself a good clap, everyone. How did you do that? 6.9% divided by, because it is percentage change in EPS divided by percentage change in EBIT. Everyone clear? So that will give you the answer as 1.15. Fantastic. Now, friends, last question is a theory question. What is the maximum period for which company can accept public deposits? Come on, tell me. 6 is maximum or minimum? My dear friends, that is minimum. Maximum is 3 years. Don't go wrong there, okay? Maximum is 36 months is 3 years. It is actually from 6 months to 36 months is the period for public deposits. Everyone clear? So we are done with this and we are done with the MCQ of what do you call it? MTP. Okay, right. Shall we go to the problematic areas now? Yes. Friends, this is a very good question on Walter's model. Tell me what is the formula for Walter's model? B divided by KE plus Walter's model. So you've learned a different formula here, is it? Hold on. D plus so you know a formula, right? Okay. I teach a different formula. Let's not mix up. You solve it your side. Okay. I'll solve it myself. We both should get the same answer. Okay. Deal?
Right? Fine. Write down working note number 1, basic data. Working note number 1, basic data. Come on, friends. Can you copy down this table in your books now? Tell me your formula again. D plus R by KE, open bracket. After the open bracket, is it? This was a close bracket, sorry. Okay, open bracket. Okay, same thing. I was just writing it in a different way. I'm writing D plus E minus D into R by KE whole divided by KE. Simply you confuse me. I thought you have come up with some new derivative formula. Okay, here I do it like this. I put D by KE plus, I put it this way. Okay, so you just check and you made the KE common and you have worked it out. Okay. Write down these table numbers in your books now, friends. Come on. Friends, this is R. This one is KE. All right, now tell me, friends, they have given you the net profit as 54 lakhs. How much is 12% preference dividend on 200 lakhs? Do you get the answer as 24 lakhs? Am I right? So I'll just take a fresh page and write down here. Okay, I'll do it over here. So friends, first I'll write down the net profit. Everyone tell me how much is your net profit? Is it 54 lakhs? 54 lakhs. Minus, I will reduce the preference dividend. Tell me, friends, how much is the preference dividend that you have? Is it 24 lakhs? So, what is the earnings available to equity holders? Equity holder will be how many lakhs? 30 lakhs. What is the number of shares that they have over there? 2 lakhs. So, what is your EPS? Is it 15 rupees per share? 15 rupees per share. All right. So, this is what we call it as E. E. Okay, ready? Now, friends, if 15 rupees per share is E, now what they're asking us over here is to find out what should be the dividend payout so that your price can be 120. So, everyone interact with me. Walter's model, what is the formula? 120 is equal to D plus R by KE. How much is the R in our case? 22%. 0.22 divided by what? 0.15 into what? E minus D. How much is the E that I have over here? Minus D whole divided by what? 0.15. Once you solve this equation, you will be ending up to get the answer of D. Can you do this yourself now? Online students, I hope my audio is comfortable for all of you. All right, friends. All right, friends. Tell me, what is the value of D that you get over here? 8 point. 1 minute, 1 minute. Okay. Do you get the answer as 8.557? Therefore, your payout, how do you find out your payout? That will be your DPS divided by EPS. So that is 8.57 divided by 15. So when you do like this, what is the answer you get over here? Is it approximately 57 percentage? Perfect. 57 percentage. How many of you are still writing? Raise your hands up. All of you are done? Perfect. Can I go to the next question now? Okay. So we are done with this question also. Let's go to the next one. Okay. Capital structure of AN is given below. 50% debt, 50% equity. So write down question number 1B, working note number 1, basic data. Working note number 1, basic data. Point number A, debt equity ratio. Point number A, debt equity ratio. Point number A, debt equity ratio. Everyone tell me how much is the debt equity ratio over here? 1:1. Now they have told borrowing rate is how much percentage? Let's write down point number B, interest. Interest. Everyone tell me how much is the interest that you get over here? 10%. Okay. Now, if R owns 8% of the equity share of AN, determine his return if the company has a net operating income of 10 lakhs and the overall capitalization is how much, friends? 20%. Now, tell me, friends, what do you mean by the word net operating income? EBIT. So, when I take EBIT, is it before interest or after interest? So in that case, what will be your denominator? You will divide it by what? KO. So from this, can I find out the overall value of the company? Correct. Write down in basic data itself, point number C. Point number C. Overall value of the company. Overall value of the company. What will be the formula for overall value of the company? 10 lakhs divided by 20%. 10 lakh divided by 20%. Ten lakh divided by 20%. So do you get the answer as 50 lakhs over there? Okay. Out of this 50 lakhs, how much is going to be equity and how much is going to be debt? So write down the next point. Proportion of equity. Proportion of equity. Proportion of equity. Okay. How much is that turning out to be, friends? 25 lakhs. Write down the next point. Value of debt. Value of debt. Value of debt. Tell me, friends, how much is the value of debt that you get over here now? 25 lakhs. On this debt, you have to pay interest right now. Write down the next point, interest. Write down interest. Interest. Everyone tell me how much is the interest that you get over there? 2 lakh? Okay, interest will be 2 lakh 50,000. Okay, right. Now, if 2 lakh 50 is the interest, hold on. 50/50. Borrowing rate is given as 10%. Okay, now tell me, once again interact with me. How much is the net operating income? Everyone tell me. From this 10 lakh, how much is going to go as interest? 2 lakh 50. So can I find out my earnings before tax? There only you do it. Right now, the next point, earnings before tax. Earnings before tax. Yes. How much is your earnings before tax will you get over there now? 7 lakh 50,000. Okay, right. So you are getting 7 lakh 50,000 on an investment of how much over here? I take a fresh page. 1 minute. So I just write down over here. Everyone listen carefully. So you got the That is 7 lakh rupees after tax or before tax? But here the tax is zero. Okay. So your earnings is turning out to be how much over here, friends? 7 lakh 50,000. What is the value of equity that you already have in your question? From this, can I find out the KE right now? Or how much is the KE that you get? 7.5 lakh divided by 25. So what is the answer that you get over here? Do you get the KE as 30 percentage? Perfect. Write down, and I think we are done with this question. They were asking for implied required rate on equity. We found out overall everything is done. So in basic data itself, we finish it off. In exam, you can just break it up into analysis and conclusion also. Okay. You want to see the question? All right, friends. Are you all done with this? Can I go to the next question now? Okay. So we are done with this problem also. Okay. 1A done, 1B done. Okay, now 1C is what we have to do. Friends, listen carefully. 1C is a question on ratio analysis. So this question, to solve it is very, very easy, provided you know how to crack the ratios. Okay, listen carefully. What is the presentation methodology? I have told you already. Basic data, analysis, conclusion. So in basic data, what are you going to do now? You will write down this entire thing. Okay. Now please interact with me, all of you. Equity capital is given. Current debt to total debt. What do you mean by current debt to total debt? Okay, so this is basically total complete liability. Total debt to equity share capital is given as how much over here? 0.6 is given. So that means if equity is 1, your debt is going to be 0.6. So here the formula would be what? D divided by E. Everyone clear? Fixed assets to equity capital means what? FA divided by E. Okay, total asset turnover, what is the formula? Turnover divided by assets. Okay, what do you mean by inventory turnover? What is the formula? Turnover divided by stock. So friends, turnover divided by stock. Here it can be closing stock sometimes it will be average stock. Okay, here since nothing is mentioned, we'll assume it to be the closing stock. So once you put these things, they have given you the equity capital. How much is the equity capital? From that 2 lakh, if I go and apply the debt to equity, can I find out the debt value? Yes, if I apply this over here, can I find out the fixed assets? So once I get these things, automatically I can go and find out the turnover and I can do the inventory, everything one by one. Yes or no? So I will not solve this problem. I will give you 5 to 10 minutes of time. Solve it yourself. Your 5 to 10 minutes starts now. Please do it. Can I show you the answer key now? Are you still doing? How many of you are still doing? Raise your hands up. Almost everyone, please do it. Friends, you can do combined study with your neighbors, okay? Cross check whether your answer is tallying with your neighbor's answer. If they are differing, why they are differing? Can I just show the answer on the board? You do it, you don't look at the board if you're still doing it. The question is copied by everyone, right?
This is the balance sheet. All right, friends, are you all done writing this? Did you get the answer in your books now?
Yes,
This one area I don't need to discuss, it's up to you. You have to solve it and complete this part. So I think you're done with this question also. Any doubts you have for me to just check over here, let me know. It's straightforward, am I right? Apply the ratios, you get the answer, am I right? Okay. So friends, let's go to the next question now. Okay, friends, question 2A is again a capital budgeting question, and this is similar to the question that we did in RTP. What did we do in RTP? Everyone tell me. We had an old machine. Here also you have an old machine. Now he is having some 5,000 units capacity. You can replace it with a new machine. So now they have given the new machine capacity. Investment is 100 crore at the end of the 5th year, etc., etc. So friends, since I am running a little bit short on time, can you do this question yourself? Okay, I'll just go to the next problem, which is a very good question in MTP, and with that we are done with the MTP problems. Okay, question number 3A. Everyone write down working note number 1, basic data. Basic data. RAM evaluates all its capital projects using a discounting rate of how much percentage? So write down point number A, WACC. WACC is equal to how much, friends? 16%. Its capital structure consists of equity share capital, retained earnings, bank term loan, and debenture redeemable at par. So debentures are redeemable at par. Write down point number B. Debentures are redeemable at par. Point number B. Debentures are redeemable at par. Then they have told rate of interest on bank term loan is how many times that of the debenture? 1. So write down. So interest on term loan is 1.4 times of interest on debenture. Can we say the debenture interest is X over here? Write down point number C. Let us assume the debenture interest is X. Debenture interest is X. Next point. Therefore, bank interest will turn out to be 1.40x. The remaining tenure of debenture and bank loan is how many years? 4 years and 6. So write down the next point. Remaining tenure of debenture. Remaining tenure of debenture. Liana, I missed your message. I'll get back to you. Okay. Remaining tenure of debenture. What is the remaining tenure of debenture? Everyone tell me. 4 years. Then you write down remaining tenure of bank. Remaining tenure of bank, that is equal to how many years? 6 years. 6 years. Now they have given you the book value of equity. Okay, so write down the next point. Book value of equity. Book value of equity. How much is the book value of equity? 20 lakhs. Next point. Retained earnings. Retained earnings. How much is that? 30 lakhs. Next point. Bank loan. Bank loan. What is the bank loan amount? 30 lakhs. No, not 30, it's 20 lakhs. Next one, book value of debenture. Book value of debenture. How much is that? 30. Next point, current market price of debenture. Current market price of debenture. Everyone tell me what the current market price of debenture? 98 rupees. Now they have told the PE multiple stands at how many times? 4. So write down the next point, PE ratio 4 times. PE ratio 4 times. Friends, have you learned the formula? 1 divided by PE ratio will give you what? Rate of on retained earnings. So can I call it as KE? So 1 by PE ratio actually gives you your KE. Okay. So here can I say if I do 1 divided by 4, what will be your KE that you get over here? 25%. So write down there itself the next point. Therefore, KE is equal to
Thank you, Srihari. The mic had fallen down. Thank you so much for reminding me. So KE is equal to 1 divided by 4, that is equal to 25 percentage. Equal to 25 percentage. All right, friends. Are you all done writing this in your books now? Okay, now. So I think from this data, they want you to calculate the rate of interest of bank loan, rate of interest of debenture, and they have given you a tax rate of how much percentage? That is, write down the next point. Tax rate is equal to 30 percentage. Tax rate is equal to 30 percentage. All right. So we are done writing the basic data. I'll give you 1 minute, read through the basic data and think what are the hidden information that you can find out. All right, friends, time is up. Everyone look up. Let's read again. How much is the WACC they have given in the question, friends? 16 percentage. What that means is, can I say 16% is nothing but KE into weight of equity plus KD into weight of debt? Yes or no? Here you have KE into weight of equity plus KD into weight of debt plus K of reserve into weight of reserve plus K of bank loan into weight of bank loan. All this together should turn out. Am I right? So I'll just put a table so that you understand this better. Particulars, cost. Then I will write down book value. Book value. From this book value, you can find out the weight. And once you get the weight, you can find out WACC. So you have equity, you have reserve, you have debenture, and then you have bank loan. Everyone interact with me. I think cost of equity we already found out. How much is the cost of equity? We got the answer as 25. Reserves also will be the same thing, 25%. Debenture interest, I don't know. What is the book value that they have told over here for equity? 20 lakhs. What about reserves? 30 lakhs. What about debenture? 30 lakhs. What about bank loan? So total will be 100 lakhs. So can I say the weights are going to be 0.2, 0.3, 0.3 and 0.2. So 25 into 0.2 will give you the answer as 5%. And here you will get the answer as 7.5 percentage. And remaining two, I should find out my overall WACC is going to be how much? This is what I should get. So for that, I should find out what is this. I should find out what is this. Please put this table in your books, all of you. Lavanya, I'll come back to your point after we finish this problem, okay? Are you all done writing this in your books now? Can I go to the next one? Okay. So now once you get this answer as 16%, we need to find out how much is going to be the interest on debenture and interest on the bank loan. So everyone now interact with me. Let's everyone interact with me. First thing, bank loan. Did we consider the bank loan as 1.40x? That is pre-tax or post-tax? Pre-tax. So from this, what am I supposed to do? I should reduce 30% to get my after-tax cost of bank loan. How much is that turning out to be? Do you get the answer as 0.98x? So here you will go and write down 0.98x. Please write down this in your books now. All right, friends. Are you all done writing till here in your books now? Okay. Now, friends, KD or cost of debt. What is the formula to find out KD or cost of debt? There can be redeemable debenture, irredeemable. Here, is it redeemable or irredeemable? It's life, etc. It's given, so it's a redeemable debt. So in that case, what will be the formula? Interest into 1 minus tax plus redemption value minus issue price divided by life divided by redemption value plus issue divided by 2. Interest, we have taken it as X right now. Am I right? What is the value of debenture that we are having over here? Can you tell me? Sorry, what is the price of one 98 is the market price. Face value is how much? 100. It's always supposed to be 100 into how much percentage? 1 minus 30% tax. Okay, wait, I think this is confusing. So we have taken the interest rate as 100x. 100x into 1 minus 30 percentage. 1 minus 30 percentage. This is interest plus redemption value will be how much? They have told redeemable at par. This because you wrote basic data, you are able to correlate. Otherwise, you will never get that. You will forget that one sentence. Minus issue price is how much? Divided by life is how many years? 4 or 6? 4 years for debenture, is it? 4 whole divided by 100 plus 98 divided by 2. Okay, so in other words, this will turn out to be 70x plus how much is 2 divided by 4? 0.5 whole divided by what? 99. Okay, can you write down this in your books now? Friends, are you all done writing this in your books? Yes. Can I go up now? Okay. Everyone done, right? So here in this place, what will come now? It will be, what was the number I told you? 70x plus 0.5 divided by 99 into 0.3. So now tell me what is 70x into 0.3? Is it turning out to be 21x? Okay, plus 0.5 into 0.3 will be 0.15 whole divided by 99. I'll keep it like that only, correct? Yes. And what is 0.98x into 0.2? Point 196x. So now we have to solve the equation. So how will the equation go like this, friends? 0.05 plus 0.075 plus 0.196x plus this thing 21x plus 0.15 divided by 99. This should be equal to how much, friends? 0.16. Once you solve it, you get the value of x. That you can put it over here as the interest rate of debenture. I'll put it in a fresh page and do it, friends. Are you done writing with this table over here? Table done, right? Okay, so I'll just come here. This was a very tricky and a good problem. Please tell me once again what are the numbers you'll get. 0.05 plus 0.075 plus 0.196x plus 21x plus point divided by 99. This should be equal to 0.16. So I'll take these two things on the other side. So I'll get 0.196x plus 21x plus 0.15 divided by 99 will be equal to, how much do you get over here? 16 minus 5 is 11. 11 minus 7.5 will be 3.5. 0.035. So now it will be 21x plus 0.15 divided by 99 is equal to 0.035 minus 0.196x. So 21x plus 0.15 will be equal to 99 into 0.035 minus 0.196x. So 21x plus 0.15 is equal to, how much is 99 into 0.035? 4.5 minus, what about 19.404x? I think then from here it should be easy. I'll take this on the other side. So what will I get over here? I think 21, I'll get 40.40x is equal to 3.465 minus 0.15. How much will that be? 3.315. So x will be equal to 3.315 divided by 40.4. 8 point, is it 8.2 percentage? Let me cross check. Yes, your answer is correct. This was a very good question in your MTP, friends. Bank loan will be this into 1.4. How much is 8.2 into 1.4? Everyone tell me. 11.49 is it? 48. All right. So friends, with this question, we have done with MTP series 1. I don't think there's any other question left out. Yes, it's done, friends. Okay. Okay. One question I've given you as homework, capital budgeting, because it's exactly the same as RTP. Please do that one question as homework. Shall we take a short break now? We'll take a 15-minute break, after which we are left with 2 dangerous questions. Have 2 cups of tea and come back. Okay. See you after the break. Thank you. Yes, 1 minute. Lavanya, you had a doubt on the inventory part, right? I'll just explain to you right away now. Inventory. There they have given inventory divided by total assets is given as 2.5 divided by 10. That is equal to 1 divided by 4. We already have found out the total assets. So this divided by 4, the moment you do it, you will get the value of inventory. So just check this part. It is clearly given over here. Okay. All right. Thank you.